All right, so real quickly, finishing up my big picture examples of the statement of cash flows. Here I'm looking at a very big picture idea of what's called the direct method, and that refers to this operating activity section and the fact that you can directly see when you look at it where cash comes from and where cash goes. So again, I've got my three different categories. Operating, investing, and financing. They're still color-coded with our really, really simple balance sheet. To start with the operating activities, just real quick. This example is so simple. So our examples we work through in class are not going to be quite as simple, but this is just to give you a big picture idea of what we're trying to accomplish. So cash from customers, we have the sales number right here. Since we don't have any receivable, we're just going to assume then that that must have all been cash. So how is that going to affect my cash position? Well, that's going to make the cash go up. Cash from customers. The only other thing we did in my little business here is we bought inventory. So we sold inventory, which is this top line, and we bought inventory. So I'm looking for what we paid to our suppliers. And if I look at this accounts payable account, looking across there, I see it had a $50 ending balance. I see that we credited it for $150. You can see that matches the inventory right there. So when we bought the inventory, we originally credited it for $150, and when we made a payment on the accounts payable, we'd debit that account, accounts payable, and we would have credited cash. So this little debit for $100, that's the cash that was paid to suppliers, right? You know what accounts payable means. That's purchases from your suppliers. So how did that payment to suppliers affect my cash? Well, that would have decreased my cash. So I'm going to pick up that $100, and we'll look in class at a way to solve for this number using inventory and accounts payable and cost of goods sold. But for my really simple example, it's just as easy as picking up that number out of that chart. So that's the direct method. Really, that's all that changes from the last one that I showed you about the indirect method. This is going to be the exact same. The land purchased is still a use of cash for $800, and the common stock issued is still a source of cash for $2,000. My change in cash will hopefully still be $2,100. Yes, my cash at the beginning is still 0, and my cash at the end is $2,100. So just to make that look nice, I'll put some underlines and we will be done. So there you go. Real big picture idea of the statement of cash flows. Basically, the whole idea is that we are using the changes in the balance sheet from the end of the period to the beginning of the period. We're using that information in the income statement to explain the change in cash. Okay, so here's our change in cash and our cash at the end of the period. So the purpose of this whole statement of cash flows is to explain that $2,100 change in cash. And we do that by using all of the other changes in the balance sheet. All of the other accounts, we have to explain what happened in those accounts and put that explanation in its proper category. And it all works together to arrive at the cash change. And then we can reconcile back to the cash at the end of the period. The end.